First of all, let's talk about the liquidity. It has changed quite a bit. I heard it got really tight towards the end of last week, and now we're expecting these OMO maturities this week. How do you see things playing out this week? Are we expecting other inflows apart from OMO?
No, not necessarily. Just OMO, I think, maturing on Thursday.
Right.
But what we expect is that the CBN will come and mop a significant portion of that out of the market like they did last week.
No, but if the market is already really tight, I'm hearing that OBB rates were, what, 80%?
Yeah.
Before Thursday, does that mean it's likely to get even higher?
Well, what made it tighter was actually the retail FX sale by the CBN on Friday.
Right.
So that funding for that was what really made market to go exceedingly high. But there will probably be refunds before the next, so anytime this week there will be refunds for lost bits. Okay. So that will create some sort of liquidity in the market, plus the maturing OMO. Yeah. So that should actually make rates come down a bit lower. So we expect rates to probably be around 16 to 20% levels.
Right, okay. Let's talk a bit about the FX markets, because what I think is beginning to unfold is that there is that increasing sentiment that the Naira is likely to weaken. And that is quite strange given where the oil price is. Yeah. So help us understand what's going on, because the first indicator is that we are seeing an increase in the spreads in the I&E window. Yeah. So tell us why that is happening.
Well, that happened about upper week when there was a global risk-off emerging market. So that affected Nigerian security. So we saw yields on FGNs go up to about 13.5 levels. As you know, most of the foreign guys started selling off their positions to get out of Nigeria. So when they sell off, they go and buy FX to get out. But that changed slightly when I think the Feds, they had the 10-year bond issuance. The general sentiment was that it was going to, yields on those instruments were going to trade higher than 3%, but it closed just about 3%. So now emerging markets are risk on, and we saw some of them come into the market towards the later part of last week. So we should see some respite this week if there's no other negative news.
But would you say there's any concern at all? Should we be expecting the Naira to weaken given the fundamentals we're seeing today?
Not necessarily, because like we said, even when last week when there was a push at that window, CBN was meeting demand. So there was, I mean, there was supply at those levels. Right. So yeah, you see some spread within bid and offer, but offer will always be at the 360, 361 levels. Right. We never exceeded those levels. Right.
So if we were to look further ahead, what's your projection? Because I think everyone expects that oil prices will remain relatively high given the tensions in the Middle East. Yeah. Do you anticipate that the Naira will, at worst, be stable over the course of this rest of this year?
I should think so, because, I mean, the CBN is committed to meeting any demand that they see. I mean, there's been an accretion to the reserves. Even with the push out the window last week, reserves were still going up. You don't see a decrease in the reserves. And like you said, because oil prices are going to be at 70 levels for a while, I mean, there's going to be demand. I mean, constant supply by the central bank at this level. So I really do not see the Naira depreciation above where it is right now.
Let's look further into next week, and there's an MPC expected. Now I'm hearing, I think for the first time, last week I heard a trader suggest that he thinks that we're going to see some easing. Do you share that sentiment? What do you think is likely to happen?
I agree. I mean, all these fundamentals are lined up for a decrease in NPR. I mean, inflation is down, there's stability in FX, and interest rates are coming down even in the secondary market and in the primary market. So really, I think it will be prudent for the CBN to at least have a concerted effort to bring down NPR. Yes, I agree.
But do you think there's anything that they could still be concerned about? Inflation, for instance, is that something that is a real risk to the upside? Do you think that could get worse at any point? Or the expectation is that it will continue to go down? Well,
analysts say yes, and I agree with them that it's going to be a downward trend in inflation, yes, and I think so. So, I mean, the figures probably come out by early next week, early next week. So we should see a further decrease. It might not be as high as what we saw last month, but the trend is generally downwards.
Right. And then what about for yields? So if the MPC plays ball and we see some easing, how low can rates get in your view? Do you think single digit could be a new normal, or do you think that is a bit too far-fetched?
Well, it all depends on how CBN wants to play the OMO game. So, for example, OMO rates went up by about 5 bips last week relative to the week before. We were not expecting that, because there was so much liquidity in the market. I mean, interbank was at 325 for almost 2 to 3 weeks. So many people were expecting a fall, but CBN mopped up at a higher yield. So it depends on how they're playing that game. But if there's a decrease in MPR, it means there's going to be a reduction in OMO, and that's where the market takes the cue from. So if that comes down, all the other rates will follow.
All right, very interesting point you're making. I want to come back to the FX conversation and give us a sense of the flow of liquidity. Now, I guess what happened last week was maybe a bit of an outlier in terms of the behavior of foreign investors, but give us a sense of what you think could be the normal in terms of flows. Now that rates have come down quite a bit, so maybe 100, 200 basis points, depending on where you're looking across the curve. Now that we're seeing those rates at where they are, and given what's happening with yields in the US, do you think that the flows will continue at the pace they have over the last few months?
I will say yes and no. Why will I say yes? Because it's for the foreign investors, it's a yield play for them. So if they're looking at an emerging market, they look at the market that gives them the highest return. So relatively, Nigeria's yields right now are still high compared to an Egypt or Ghana. Ghana is higher, but then you have FX issues with Ghana. So those are the things they look at. But then if yields in the States start to go up, then you start seeing them pulling their money out to go back to the States. So that's why I would say yes and a no. As long as the yield play still makes sense, because if they are comfortable that they will get filled at 360, so it's just the spread that they're looking at.
So that exchange rate stability is crucial.
It's crucial, yes.